Hey guys, Tara Ryan with Fairway Mortgage, and today's tip from Tara is 5 ways that the VA loan differs from other loan types. I love the VA loan. We do a ton of them here, but I want you to know these 5 key differences. Number 1, condos. In order to do a VA loan in a condo project, that condo project has to be approved by VA. In the old days, if it was approved by FHA, they had some reciprocity. That is no longer the case. If it's not approved on the VA website, then you cannot do a VA loan in that condo project. Very important. Second thing, appraisals. There is no appraisal contingency on VA loans, just like with FHA. However, with VA, they have a unique thing called Tidewater. That is the name of a regulation that's out there, but basically it says that if the VA appraiser cannot get the value mentioned in the sales contract, then they invoke the Tidewater provision, and basically that means they will reach out to the lender and also to the agents and ask, hey, what comps did you guys use to come up with this value? Basically, they give you a warning about the value in advance, give you an opportunity to provide additional comps before they issue the report. I think this is a huge positive. It streamlines the process, because we all know once the appraiser completes the report, they're a little less likely to jump in and change value later. So that's the deal with a VA. On the condition of the property, there's sometimes concern that VA appraisers are somehow tighter on the condition of the property. That is not the case in my experience. They are looking for anything safety related. That is true, just like with FHA. Missing railings or peeling paint are the 2 main things that are going to come up on a VA appraisal. However, those are cheap and easily fixed, so it's really not that big a deal. Termite letters. VA is the only loan left that requires a termite letter on all properties unless low-rise or high-rise condo, okay? And the 4th, non-allowables. These are fees that the buyer is not allowed to pay. Specific to VA loan, there's a list of fees, including the a settlement fee, as well as the termite letter. There's a list of fees that the buyer cannot pay. That can be confusing to the parties. So best practice, if you get some seller concessions, typically $1,500 or more, and then check the box yes that you want those those non-allowables to be included in. I think the answer is yes, they are included in the seller concessions. Then you're covered. Then nobody needs to worry about it. The lender will apply those seller contributions to those line items first, and therefore it's a non-issue. And number 5, the last thing different about a VA loan is it's the only loan that specifically allows concessions. So on top of seller contributions towards closing costs, and by the way, there's no limit on that. The veteran can have all closing costs paid by the seller. There's no percentage limit. But on top of that, they can get up to 4% in concessions. What are concessions? Basically anything the seller wants to give them. The seller can pay off a debt for the buyer. The seller can buy them a flat screen TV. I've done a deal in the last month where they purchased a fence for the buyer, another one where they did $2,500 to a vendor for repairs after closing. These are things that are really difficult and most likely not options on other types of loans, but on the VA loan, they're perfectly allowed. So 5 key differences with VA loans. Guys, we do a ton of VA here. You need somebody who's an expert in that type of loan product to take care of your veterans. And trust me, some of these online guys, some of the big names, are known for being really slow and making it a little complicated of a process. If you have a veteran, give them the best shot at getting their offer accepted, because they're going to have a local lender who can speak to the listing agent about their expertise with VA loans, but also set them up to have the best possible experience. So that means more referrals to you. Let me know how we can help.